Alright, welcome back everyone to another market recap. Now this one is going to be a little shorter than normal. Typically, I'll try and have them be a little bit longer and more in detail, but since I don't have a ton of time today, I'm going to do a little shorter one and just talk about the best parts of the day and different trades you could have caught. So if you find this valuable, definitely consider leaving a like, subscribing, and also checking out my completely free Discord. The link to that is in my bio. So let's talk about what happened today. We had this 1 hour for value gap. Actually, this is also a 2 hour for value gap. And at the time, I thought it was possible we were drawing towards this low all the way over here off the screen. This low seemed like a possible draw on liquidity. So since the higher time frame was bearish, I was taking a look at this. In my head at the time, I was thinking, okay, we could possibly get a sell model. So if you don't know what a sell model is, it's when you use a higher time frame key level to frame like a plan for where the market's gonna go. So in this case, it was this 1 hour key level, this 1 hour per value gap. The market pushes up into it. And the reason this is significant, the reason it becomes significant is we actually get SMT in this fair value gap. So if you don't know what SMT is, essentially SMT is when one asset forms a higher high and another asset forms a lower high. And it's with two assets that are extremely correlated. When this happens at a key level, that is a sign of a reversal. So you can test this yourself, but I'm telling you, it's 100% real and legit, and this is a way to detect what liquidity is being targeted. Okay, so there's that 1 hour for value gap. We got SMT here, so from here, you could have framed this as a sell model. And what did we have below? Well, we actually had, it's not going to show it right now because we already took them out, but we had a ton of relatively equal lows right here. And so to me, this was a big flag. If I wanted to be bullish, I wanted to at least see these relatively equal lows get taken out. And you might be wondering, oh, well, we had London's lows right beneath us, right beneath that. Why didn't we go to London's lows too? So this actually was London's lows, and we did not go to London's lows. And one reason for this is look at where the majority of the trading happened. It all happens within here. So to stop everyone out, it doesn't need to go actually take out London's low here. See that? That's only like 0.1% of the trading volume that happened. To stop everyone out, all that needed to happen was the market needed to go to these relatively equal lows. And you can see that when these got hit, the market got a very, very strong reaction. Now, I'll go over a trade you could have taken after mapping out this sell model. So you had SMT within this 1 hour for value gap. Now, unfortunately, I didn't notice it in the moment, but I think it's a good trade, so we'll talk about it. So you got a 5-minute change of state of delivery. That's when a candle body closes below an old so when you get a candle closure below this old low here, or actually technically it's the old, when you get a candle body closed below the old swing lows bodies, that's a change of state of delivery. I might have explained that a little bit weird, but go watch my videos on change of state of delivery, and hopefully that'll help you out a little bit better. But we had this 5-minute change of state of delivery here, and we pushed up into it, and we started delivering from it. So this would be a sign that, hey, we're possibly going to go run all this liquidity. We had this is just a giant range here. So at the lows of this range, that's where everyone that bought in this range is going to get stopped out for a loss. And so you can target that, understanding smart money concepts, you can target that. And so you have the entry model that I would have used here. So after we had the test of this 5-minute change of state of delivery, you'll note we also swept out this high here. And at this point, we have a series of down close candles. So you can consider that a breaker because it's a high, a low, a higher high, which sweeps out a high, and then a lower low. So these series of down close candles is a breaker block. So I can mark that out like this. And then as well, this breaker block, so if you don't know what a breaker block is, go watch my other videos on it. But this, whenever a breaker block overlaps with a fair value gap, that is a really good entry point to go target whatever lows or highs are in whatever direction you are targeting. So here you have this breaker, this high, low, higher high that sweeps out this high, and lower low. It's overlapping with a fair value gap. A fair value gap is when you have a wick on either side and you have a gap between those wicks. You can see that here. If you don't know what a fair value gap is, there's lots of I don't know if I have a video on fair value gaps, but there's lots of videos on fair value gaps. It's not super complicated. And so anyway, here we get this possibility for an entry. I would personally put stop loss above the breaker. And then as I've been saying, I'm personally just targeting 1-to-1s right now just to be consistent and actually make money in the markets, because you don't need to hit a 3-to-1 to make a lot of money. A 1-to-1 can make you thousands of dollars. You just have to do it consistently, you know. So anyway, this actually would have ran all the way down to these relatively equal lows, and this would have hit take profit. Now as well, you'll note that we have a low over here, and we end up getting SMT with this low. And so when this happens, let me mark that out as an SMT. When this SMT happens, all of a sudden, we took out this giant liquidity pool here. We took out these relatively equal lows. We took out this entire range of price action. So when this happens and we get SMT, and then all of a sudden we get a giant candle higher, you should think, okay, we're probably not going to London's lows anymore, because we got an SMT, we swept out these relatively equal lows, and like now we just gotten a giant momentum candle. So there's really no reason for us to go back or try and go to London's lows now. Now you can frame a buy model with this SMT. So SMT occurs at the top and the bottom of different buy models. So once again, you have another breaker, the series of up close candles here, a low, a high, a lower low, a higher high. This also, I did not take this, but I noted that you could have taken it. So we sweep out this low, low, high, lower low, higher high. And this one's a little bit different, but you can mark this breaker out using, since it has a long wick, you can mark it out with the wick. And this overlaps with the fair value gap here. And boom. Yeah, that is a really, really solid entry point for this buy model. Enter stop loss below the breaker. And then we have a ton of liquidity above. Probably just target these relatively equal highs. That'd be a 1.8-to-1. Now, personally, I'd probably wait for lower time frame confirmation off of this, just because I'm like super picky. But yeah, I'd probably wait for like a 15-minute change state delivery off of this. So like I'd probably enter off of this or something like this. And then still this would be like a 1-to-1. So same idea, but yeah, just waiting for that 15-second change state delivery off of it. And now as well, let's say you missed that entry, because I actually missed that, right? Well, what could you have done? You actually, Adanomics made this video where he's like, we are leaving entry models in 2024, and I could not agree more with that, because the market at the end of the day, it's just seeking to run highs and lows. You don't need to overcomplicate it. If you get good momentum towards good liquidity, just enter, dude. Enter off of that. Like, for instance, you get two different really, really good momentum candles, and I'll show you both of them, right? You get, so you have, remember, you have all this liquidity here, these relatively equal highs here. So this is where the market's being drawn to. We know that it's very possibly a buy model now. So here we got this side of the curve, and then now this side of the curve. And so going on to the lower time frame, you can see that we had two really good opportunities to enter on momentum candles. One where we get a wick down and then a close higher. Now, the hard part about this is you need to be watching it when it occurs, but once again, if you can just be patient and watch it and wait for it to happen, you can see this was like a really good thanks for the liquidity wick. That means like basically like everyone got stopped out here, and then we got a candle close way higher. So Dodgy calls these thanks for the liquidity wicks. Yeah, just how I refer to them, but yeah, it's just a giant like wick below all these lows here, and then you enter on like I said, like don't overcomplicate it. Like we have liquidity above. I could just honestly, I would just enter on the 30-second momentum candle, and then boom, right to those equal highs, and then same thing once again, right? We have another momentum candle towards this liquidity, and you can just move your stop loss to break even right away, and it's a relatively safe trade. It's a 1-to-1. You know what I mean? So, yeah, don't overcomplicate trading. Just understand that old highs and old lows, that's where other people are going to get stopped out. You take profit there, and then yeah, find an entry to target that, and that's literally it. So I hope you enjoyed this video. I hope this was helpful, and I could go more into detail, but I probably have to go right now. But in the future, I'll go more into detail with these videos. I will see you guys in the next one. Bye.